While debate continues on the 2018 Farm Bill in Washington, a majority of farmers say trade is a much bigger issue for them. Last week, a team of negotiators failed to reach an agreement with China to avoid additional retaliatory tariffs and avert a trade war. However, discussions will resume next week with leaders of the two superpowers. At the same time, this week's NAFTA negotiations ended in a stalemate, which could threaten the chances of concluding the deal in mid-May, as U.S. Trade Representative Robert Lighthizer had predicted. For months now, the unknowns regarding NAFTA have led to the U.S. losing business with Canada and Mexico. So the hope is the deal is close.
I hope we get it done in May. We need to get it done in May. The Mexican customers are getting real nervous.
The caveat is the toughest issues haven't been dealt with, including Canada's Class 7 milk pricing.
We don't think we're making any significant impact there. And again, it's a policy of supply management that we're going to be continuing to defend.
At the same time, farmers are concerned about the president's tariff schedule. Chief Ag Negotiator Greg Dowd says U.S. agriculture is at the tip of the spear with the $53 billion of initial and retaliatory tariffs.
That's now 82% of U.S. agricultural exports to China and are involved in this trade situation.
U.S. Ag Secretary Sonny Perdue has been reassuring farmers the president has their back, yet he's preparing a trade compensation program, the full details of which are not being disclosed.
There are regular programs for farmers over PLC and ARC and other types of things that could be utilized, but there are also other authorities such as CCC and Section 32 that could be utilized.
However, farmers say they want trade, not aid.
It's really anybody's guess what this might look like. It certainly will not replace getting a good price from the market, which is ultimately what we want to see.
And they, along with lawmakers, are asking the president to move swift to avoid additional tariffs like those imposed on ethanol, pork, and now sorghum. Dowd says the tariffs on China are warranted due to their unfair trading practices and trade imbalance with the U.S. Currently, the U.S. imports $500 billion in goods from China versus the $150 billion they buy from us.